Hey everyone, if you're totally exhausted by that emotional roller coaster of manual trading and you want to understand the real mechanics of wealth creation without being glued to your charts at 3 a.m., well, you are in exactly the right place. In this explainer, we're unpacking the professional guide to Forex account management services. We are going to look at the exact step-by-step frameworks that professionals use to securely manage and trade capital on behalf of investors.
Okay, let's dive into this. Here is our roadmap for today. 1. The Forex management solution. 2. Exactly how PAM and MAM work. 3. Ironclad security and regulation. 4. Top brokers and their requirements. And 5. Pros, cons, and funding.
All right, Section 1, the Forex management solution and the realities of Forex trading.
So can someone else actually manage your Forex account? It's a massive question, and it's exactly what so many burnt-out retail traders ask after facing the notoriously high failure rate of manual trading. I mean, let's be real. It takes immense time to learn, and the emotional turmoil of watching those markets tick up and down all day can be absolutely exhausting. So technically, yes, someone else can manage it for you, but how they do it legally and safely, well, that is exactly what separates the amateurs from the true professionals.
And this brilliantly illustrates that exact divide. The average retail trader is frequently dictated by fear, greed, and just the immense, crushing stress of manual execution, which unfortunately often leads to a sudden crash. Contrast that with professional managers. These guys operate with strict emotional discipline, utilizing advanced institutional tools, algorithmic strategies, complex heat maps, you name it. It's just an entirely different playing field.
Moving right along to Section 2, how PAM and MAM work, focusing on the professional tech. So the primary piece of technology behind all of this is the PAM, or Percent Allocation Management Module. Honestly, think of this like a giant, highly sophisticated communal investment pool. Your investor money gets pooled right alongside the manager's own capital. If the account makes a profit or takes a loss, that's distributed strictly by the equity percentage you own in that total pool. And what's so incredibly powerful about this structure is the built-in transparency. The manager is literally risking their own funds right alongside yours. That creates a massive, undeniable incentive for them to perform well.
Now let's consider the MAM, or multi-account manager. If the PAM is that communal pool we just talked about, the MAM is like a bespoke, perfectly tailored suit. It offers incredible flexibility compared to the standard model. With a MAM, a manager can assign completely different leverage settings and specialized allocation methods to individual subaccounts. So why does this matter to you? It means a super aggressive trading strategy can be perfectly dialed back to match a more conservative investor's risk profile, all within the exact same system. Pretty cool, right? But the absolutely most crucial concept to grasp about both of these specialized software structures is real-time automated replication. A manager executes a trade on one master account, and bam, it instantly mirrors to all connected client accounts. But here is the ultimate safety net. They cannot withdraw your funds. No way, no how. Your capital remains safely locked in a segregated account exclusively under your name. The manager has the power to trade the capital, sure, but absolutely zero access to withdraw it. Which brings us to Section 3, Ironclad Security and Regulation, and how you go about protecting that capital. Look, before a single trade occurs, you've got to build a digital fortress to protect yourself against phishing and fraud. Here are 3 non-negotiable steps. First up, generate a complex alphanumeric password immediately upon signup. Second, enable 2-factor authentication on your platform. It links your login to a mobile authenticator, meaning even if someone cracks your password, it's still not enough to get in. And finally, professionals always utilize a virtual private server, or VPS, for a totally encrypted, low-latency connection. Oh, and a quick reality check here, checking your trading dashboard on unencrypted public Wi-Fi at a local coffee shop, that is a massive vulnerability. Just don't do it.
So, the crucial point is that security isn't just about software. It's also about strict legal compliance. Regulatory frameworks definitely vary globally, but they are your ultimate safety net. For example, over in the UK, any entity offering Forex account management services simply must be authorized by the Financial Conduct Authority. Handing your capital over to an unverified manager is literally one of the costliest and most easily avoidable mistakes an investor can make. Always verify their legal standing before moving forward.
All right, Section 4, Top Brokers and Requirements. Let's look at the top brokers for 2026.
Now, what's really interesting about this is the staggering variety of institutional-grade features currently available across these top-rated platforms. FP Markets, coming in with a 4.9 rating, offers raw spreads from zero point 0.0 pips alongside really advanced MAM and PAM portals. Then you have AvaTrade, which beautifully integrates automated copy trading with their AvaProtect risk management. IC Markets is going to appeal heavily to those speed-focused strategies, boasting ultra-low latency execution via Equinix NY4 servers. And Exness provides instant withdrawals, which is always nice. These are the highly regulated, hyper-fast environments where top-tier managers operate to secure their edge.
But we do need an important reality check when you're stepping up to this level. A standard retail account at a typical broker might let you start trading with as little as $10. However, professional managed accounts operate quite differently. Because you are essentially hiring a top-tier expert who is utilizing sophisticated, expensive software, these professional services demand much higher capital entry points to make the infrastructure and the setup actually viable for everyone involved.
And finally, Section 5, Pros, Cons, and Funding. Let's cover the final action steps.
Once you've actually selected a broker and a manager, you have to fund that segregated account. But hold on, before you deposit a single cent, you absolutely must complete mandatory anti-money laundering or AML procedures. I know, supplying your government ID and digging up proof of residence might seem like a chore, but this rigorous verification procedure is exactly what keeps the entire global ecosystem legally secure.
With verification totally complete, how do you actually move the capital? Well, bank wires remain the gold standard for large amounts, even if they take a few days to process. For immediate access, credit and debit cards offer instant crediting, though usually with slightly lower limits. Interestingly, the industry is really shifting right now. Many modern brokers accept cryptocurrencies via platforms like Bybit or Mexi, giving you a lightning-fast, decentralized funding option. And finally, e-wallets like Skrill and Nettler offer excellent global reach and convenience. Let's move to and see how this all builds to the ultimate decision, weighing the very real pros and cons. The pros are undeniable, right? You get immediate emotional discipline, access to advanced institutional tools, and true time freedom, allowing for a genuinely passive investment journey. But the cons are just as real. You'll typically have to surrender roughly 20% to 30% of your gains as a performance fee. You also completely sacrifice manual control. Interfering with a manager's open positions can entirely rack a carefully laid strategy. And above all, inherent market risk never disappears, literally. Even the best manager in the world cannot guarantee returns.
Which brings us to our final thought for today. Are you willing to surrender manual control to gain a professional edge in a volatile economy? The world of foreign exchange is this wild cycle of incredible opportunity paired with very serious risk. Handing over the wheel to a professional PAM or MAM manager can be an incredibly powerful tool for your portfolio, but only if you respect the process, demand absolute transparency, and always do your homework. Thanks so much for joining me for this explainer, and until next time, stay focused and keep learning.